And in our market analysis segment this afternoon, I am joined by Toba Kamete, who is the Treasury Sales Manager at Nedbank. Rather, a very good afternoon to you, Mr. Kamete, and welcome to the program. I'd like to start here. The U.S. and China extended their trade truce to November 10. How significant is this extension for global trade sentiment?
Good afternoon to you and viewers. It really doesn't change much in terms of what we've seen from the initial announcements in April, but it sort of prolongs the uncertainty that we've seen prevail in the market over the last few months, because then it means things could change, either for better or for worse. So with uncertainty in the market, then it creates quite a number of issues, if I can call it that. So we expect then that there will be sort of muted, trading or decision taking because of that uncertainty until people or investors, market participants are able to see what outcome is going to come out in November.
Right. This extension, how might it impact U.S. exporters and importers, especially those with China-dependent supply chains?
So currently, it means that they will be bearing the current tariffs that are currently happening. But I think, as I've mentioned, that it bears uncertainty. It means long-term decisions cannot be made until then. So that is how it would then affect businesses, your importers and exporters alike, to say that you probably don't want to commit to anything further than the few months that we have until that decision.
Right. Let's get into the CPI data that came out yesterday. The consumer price index increased a seasonally adjusted 0.2% for the month of July and 2.7% on a 12-month basis. What is your interpretation of these figures?
So we've seen a modest increase, as you've said, in the CPI numbers coming out yesterday. So the market has sort of reacted to this, with confidence that we are likely to start seeing a reduction or an easing in the monetary policy stance of the Fed, because the market was sort of expecting a higher print than what we saw yesterday, especially with the introduction of tariffs. So waiting to see how those will filter down to consumers. But so the print that came out yesterday was sort of within markets' expectations, and further exacerbated expectations that the Fed is going to cut rates in their September sitting. So that has sort of then weakened the dollar. We've seen the dollar take a bit of a knock, reaching levels of about 17.5 on average today against major currencies.
And our equities, we're seeing market fluctuations here and there. How are we looking in terms of figures today?
From an equities perspective, our equities are doing quite well. You can see all of them are in the green. So that is widely due to the expectation of an interest rate cut. So that has sort of given investors confidence that rates are going to go down, which means that they're then moving away from yielding assets, from your bonds and treasury bills, because rates are expected to go down, and moving more into your equities and your gold as well. So we've seen almost all the indices showing a positive, with the S&P 500 showing a significant increase of 1.13% at $6,445.76. The FTSE also up 0.2% at £9,147.81. And the JSE All Share as well, up 0.64% at 101,000
Beautiful figures there. How can we keep up this momentum, the improvement? How can we make it more sustainable, see more growth in the coming days?
So there's quite a number of economic data that is coming out. I'll start maybe from a South African perspective. Today we saw the Chamber of Commerce release a business confidence index in South Africa, which showed that there was an improvement in that confidence in July compared to June at 116 against 113.
Okay.
So that sort of shows that how the private sector is viewing the economy of South Africa. We saw, that is due to a number of things. Vehicle sales is due to the price of precious metals, which South Africa is an exporter of, and all of those things. So there is positives, but also, we still have uncertainty in terms of tariffs. We still have geopolitical tensions and all those other factors that are impacting or that move the needle in terms of the indicators. So it's a more of a watch and see. In
terms of commodities, can you break down the numbers for us?
All right. In terms of commodities, gold is doing quite well today. It is at 3,366.54 per ounce, up 0.62%. So gold tends to do well in an environment where rates are low. So with the expectation of rate cuts in the market in September, then market participants then look at safer options to put their money in, and then gold then tends to be one of those options. So it has benefited from the print that came out, the CPI print that came out yesterday. And then Brent crude is down almost 1% at $67.6 US dollars per barrel, largely due to increased supply in the market. We also received a forecast from the International Energy Analyst report, which showed that output of oil products of oil is likely to increase by 2.5 million barrels per day compared to a previous forecast of 2.1 million. And then that is unfortunately not countered by the demand of oil in the market. With the uncertainty that's happening, with the large economies, then there is sort of low demand for oil. So that has knocked down the price of oil significantly. I think it even went down to about $66 earlier on in the day. But we've seen a slight recovery to the 67 that we're seeing now.
Right. And our currencies, how's the rand or the lilangeni looking against the dollar?
So the lilangeni is trading, quite well, rather the rand, at 17.5 against the US dollar, up 0.67%, at 20.5 against the euro, and at 23.76 against the pound. I think we've sort of discussed the factors that are going into this. It is the business confidence numbers, it is the weakness in the dollar due to the CPI print, and just the geopolitical environment. So it is, we've seen quite an appreciation so far in there. And I think these are levels that we haven't seen in a while.
Right. Thank you very much, Toba. That was Toba Kameze for our market analysis segment this afternoon. We've almost come to the end of the show, but I'll have you know that Trump is meeting Putin this coming Friday, and we can just expect, the numbers to play differently and some of the market elements to be affected. However, we'll be on the lookout for those numbers. For now, from myself and the team here at the Nedbank Business Watch, it's been lovely. Until the next edition, take care.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime,